Hey everybody, welcome to our broadcast of essentially Business Unleashed Live. So welcome those who are joining me on the Zooms. If you are not, just go to businessunleashedlive.com. You can actually join me personally in the actual private Zoom area. And so what I'm going to be talking today is probably what everybody likes talking about, and that is money, cash, revenue, but more importantly, things like pricing strategy and pricing psychology. I've been running these lives purely to give tactical ideas, strategic ideas, and more importantly, things like questions and answers for those who are scaling and growing their agency business. So if you've been joining me live on the Zooms, if you go to businessunleashedlive.com, that'll allow you to register. It'll give you a private password and you'll be able to access this live and join me here on the Zooms, ask me questions directly, and more importantly, enable me to help you to scale. We've got a little bit of time with us today that I just want to talk about. Probably one of the most areas that tends to create a lot of confusion is how much do I charge for what I do? And in some cases, what will the market bear? And more importantly, how do I profit from what I do? A lot of people don't realize things like margin, different pricing methodologies. They just don't have the understanding to be able to scale this thing and grow this thing, because they're kind of just copying the market. A lot of people, when they get into this game, they tend to underprice, undervalue, undercharge, and a lot of that stems from a confidence issue. It's got nothing to do with your ability to understand pricing models. It's purely how confident you are in delivering the service that you deliver to the market and what you're willing to accept as a remuneration or value. If you value something at a fairly low price, then your expectations of results also may be skewed by the fact that it is low value. So the biggest thing a couple of things that come up with pricing and from the confidence perspective, this goes back to being super clear about what you do and the results you get for your clients. If you're not clear about the results or the outcomes, then you're going to have to go through a learning curve, and that learning curve is only going to happen when you actually engage in real customers. So this is a game where you get better at what you do with the more clients you actually work with. And so your experience will improve, and naturally your confidence will improve, and then your pricing consciousness will also increase with that as well, because obviously the more you get experience, the more you start to charge, the more confident you are. It kind of speaks to the collapsing ladder of, if we have clarity, number one, once we've got clarity of what we do, who we offer it to, how we can get a result for people, that gives us a level of certainty. When we have certainty, that builds a level of confidence. When we have confidence, we can actually move forward. Most people struggle with the clarity piece. It's probably the number one piece. So there's a couple of things to take into consideration in pricing. First is your own personal pricing mindset. Now, if you undercharge, or if you feel, I've asked the question, do you feel you're undercharging for what you do? Every single person I ask that question to in the agency game or the consulting game or the coaching game will say yes to the answer. Yes, I believe I'm undercharging for what I do. So if you do and you believe that, then naturally, ultimately what happens eventually, you start resenting what you do, and that's going to create some problems. So why do we undercharge? Why do we not price ourselves correctly? Probably the big thing, again, I alluded to, confidence in being able to deliver, but two, just not knowing what the market will bear, not understanding perhaps the outcomes that we can deliver and the true value of that, and not even understanding things like profit margins and costs and expenses. One thing I highly recommend people do is book an hour, pay for an hour for your accountant to walk you through a profit and loss statement so that you understand some of the critical numbers in your business so that you can actually grow and scale, right? You know what your expenses are, you know what your physical personal costs are, you know how much profit you're making out of what you do. This is an important spreadsheet that you should be looking at regularly. I look at that spreadsheet on a daily basis. These days with software, you can actually kind of track your revenue and cash flow, literally on notice. Like you can literally go and see what your position is. This gives you a lot of strength in being able to forecast, predict, and also grow. So a couple of things. Personal pricing mindset, very important. Value-based pricing versus commodity pricing. So what I mean by value-based pricing, so pricing a product based on the perception that you create around the value or the outcomes. For example, if you can help a client generate $100,000, you can price yourself out at $10,000 for that 100K. If you can make a client $1 million, then you should be able to price yourself or ask for at least $100,000 in investing in your services for that $1 million outcome. Now, the challenge with value-based pricing, it's something you probably want to do when you're experienced, when you've got a lot more confidence in the outcomes that you can deliver, and you're dealing with clients that you actually understand what the margins are and what the opportunities are from a client's perspective. So value-based pricing is something that you want to build towards, that you build in your confidence. You want to set a price. So the first price that you want to set is your billable hourly rate. Now, if you do what most people do, they'll charge $25, $35 an hour, which really essentially is like, that's a salary or a worker type mentality, that I'm paying myself $25 or $35 for my time. I'm valuing my time as an employee, basically. What I highly recommend people do is that you should be charging, if you're a service provider or you're a professional in what you do, the starting point, the minimum you want to be charging is $200 an hour. Right now, at retail, if you're incorporating your time and deliverables to a client, and let's say you give 5 hours to a client, then you want to be charging between $1,000 to $1,500 for that 5 hours worth of work to the client. Right? That's if you're billing at an hourly rate. And with hourly rates, what tends to happen is you will cap yourself. I'm not suggesting that you invoice people for an hourly rate, but you want to establish an hourly rate that you are comfortable with in charging a client. So if you're saying we're $200 an hour, and if you spend 10 hours of your time investing in a client in terms of doing work for them, then they should be remunerating you at $2,000 for those 10 hours worth of work, right? So the first price is, what do you charge? What are you going to charge for your time? As a professional, I would highly recommend that you look into the range of between $150 an hour to $200 an hour. If you're really good at what you do, I'd bump that up to $300 to $500 an hour, depending on what you're delivering to the market. But you should be able to offer that option as time on your website. People can book a time with you and pay you. And a lot of software these days allows you to take payment. Even Calendly, if you're just using Calendly allows you to take a payment from a client to book an appointment, which will confirm that booking, invoice the client, do that whole thing. So you can get paid for what you do, and you should. So the first thing is have a billable hour, right? The second thing that you want to be doing is you want to look at what it costs you and how much time it takes you to deliver for a client. Because one of the things that I found, especially this happens with websites, is if you look at your effective profitable rate, right? Your effective profitable profit margin based on the time, or effective value rate. What most people do is they'll say $2,000 or $3,000 to build a basic website. Right? Now it's going to take roughly 40 to 60 hours, maybe a little bit more, to actually build that site. By the time you get the content, the copy, set up the coding, make sure all your links are working, do some on-page optimization, some off-page optimization, making sure that you index the site correctly, making sure that you've got some opt-ins and things like that. Some people will charge as little as $3,000 or even less for something like that. When you work out that you're investing up to 60 hours to put that out in the marketplace, your effective hourly rate, right, your gross effective hourly rate ends up being about $15 an hour, $15 to $20 an hour. Now your profit rate, take out taxes, take out any costs that you incur, and you're probably going to get back to about $10 an hour. So what most people do is they don't take into consideration how much time they're going to invest in delivering on a project. So one of the things that I'm mindful of is, if you're going to hire a team member to deliver, how many hours is that person going to dedicate towards that project or to that task? You need to incorporate that as a cost for your deliverable. And then from there, you want to put a margin on that cost. So the basic margin structure that a lot of people work with is 3 to 1, right? So if it's going to cost you $10, you're going to charge $30. If you're going to take on a service that's going to cost you $100, you're going to charge $300. If you're going to use a supply chain and your cost is $1,000, you're going to charge $3,000, right? 3x the price. That means you've got margins. So your profit margin is 100%. 3 timing the price is 100%. So let me explain that, because a lot of people get confused, right? What most people think 100% is doubling the price. So that, let's say your cost is $1,000 and you double the price to $2,000. Now your costs are $1,000, you only get to keep 1,000. You don't get to keep the two. You have to pay the one out. So what you're doing effectively is, if you're doubling the price, that is 50% on cost. If you want 100% margin on cost, then you need to triple the price. You need to 3x the price. So instead of paying out $1,000 and keeping 1,000, you're paying out 1,000, you're keeping 2,000. Now you're keeping 100% at retail as your gross profit margin after costs. So when you're charging people, just as a basic rule and a basic model, you want to 3x on cost, 3x on top cost, because that's also going to take into consideration any taxes and any other fees that you may incur over and above the physical cost of your hiring to deliver, right? Now, if you are the cost in the business, you need to cost that out based on your effective hourly rate. If we're saying I'm going to charge $200 an hour and you put 10 hours into a project, you're going to bill at $2,000 an hour, $2,000 for 10 hours, right? Or another way to create a situation where a client pays you for time is you package time. So you might say, if you're hiring a team member to delivery or facilitate for you, obviously that team member might, you might cost you $10 an hour or $15 an hour for their services. You can bill that to a person at $100 an hour. So if you're going to give 5 hours worth of time, you can have a 5-hour pack and charge $500 for 5-hour pack and have your team deliver. Your profit margin is very significant, but what people will do is they'll buy chunks of time. So to give an example, this is something you can do when you get things like scope creep. So essentially what scope creep is extra work that you do outside of what a client has actually paid for. One of the mistakes that people make in web development or even in creation of a campaign is they say something like this. They'll say to the client, unlimited changes, right? You can change whatever you want, whenever you want, for as long as you want. So for the life that you have delivering this particular service, you're literally allowing the client to make adjustments and changes. Well, every time a client does that, it costs you money. Every time somebody takes your time, or every time somebody makes an adjustment because you've made this unlimited adjustment policy, they're taking time, and that time is going to cost you. That time is going to take you away from billing or generating other clients. That time is going to take you away from managing your business, and you're not actually getting paid for that time, right? So this is the mistake a lot of people make when they have things like unlimited changes. So if you use packaged time, you can say, hey, this is a service pack, or this is a customer help pack. We start, a 5-hour pack is $500. Once the 5 hours used up, you buy the next 5-hour pack, right? So you're not billing by the hour, you're billing by units of 5, or you're billing by units of 10. So you might have a 5-hour pack or a 10-hour pack. So to give an example of how this works is, I remember working with a client and we had a website and we charged the client $25,000 for the website. Now it was delivered to the specifications, but the client kept on wanting to make changes, kept on wanting to make adjustments, right? So to do that, we would charge them a service pack. So they would buy these 10-hour blocks for $1,000. Well, they ended up buying another 22 10-hour packs. That's $22,000 over the $25,000 that they originally paid for the website. So the website ended up costing them $47,000. So every time they wanted to make change, they had to pay for those changes. And so rather than billing by the hour, we would bill by the block. So when they would use up that time, then they would just go and buy another chunk of time, right? And so before you know it, that price point. But here's the thing in that idea, you're actually getting paid. You're not giving away your stuff for free all the time, right? So this is something you want to take into consideration, is what are some of the things that you can charge for in your business? Now, one of the things that I teach people, the people I work with and coach, is we encourage them to charge for a strategy session. The majority of people in our market, they usually give away free strategy sessions. And those of you watching this live or joining me here on the Zooms, if you go to businessunleashedlive.com, you'll be able to join me here on a Zoom call and I'll be able to answer your questions directly. But most people give away strategy sessions for free, right? This is a common thing that a lot of people do. But what happens with free is that you give a whole bunch of time away on the promise or on the maybe that somebody's going to work with you, somebody's going to decide to work with you. The challenge that I have with giving away free strategy sessions is there's no value in the strategy session. There is a perceived value only if you position that value to the client. So that's another thing, right, is you need to position, if you're going to give time away and you're going to work on workflows and blueprints and structures for clients, if you're going to give that away, right, then ultimately what will happen is that the client doesn't value that. The client says thank you. And so now anytime they're going to ask you for advice, they're going to expect you to give the advice for free because that's what you do, right? So what you want to start thinking about is, can you charge for your time for a strategy session, right? One way to position that is we do a strategy session. In the strategy session, we we do a blueprint or a workflow, or we do a mapping out of your strategy, craft an offer, maybe optimize a campaign. And for us to do that, it's going to cost you $1,000 or $2,000 or $5,000. One of our coaching clients, we taught them how to charge $5,000 for a strategy session to sell websites. Now, their average website sale is $35,000 to $50,000 plus, but every client pays $5,000 for a strategy session. That strategy session is to get super clear on the brief for the website, and they charge for that. Now, the client would say to them, well, this web developer does that for free. And then they ask a question, say, well, that's great. Go and use the developer that doesn't value their time and we'll do all this for free, right? Ask this question: are they developing strategy for you, or are they building a website, right? Are they developing strategy? And if they say that they do strategy, then ask them to articulate what the strategy is. Ask them to articulate. Now, in most cases, what happens is people go away, start asking questions, and realize that the web developer has no idea. All the web developer wants to do is build a website, right? They're not thinking about the strategy. They're not thinking about the customer journey. They're not thinking about the functionality. They're not thinking about optimizing the site for maximum impact in terms of revenue. And so they will come back to the person that I coach, Headley, and ask them, okay, great, let's do strategy first, right? So whenever you work with their agency, first thing, every client pays $5,000 for a strategy session. It's not free. So you can charge for a strategy session, and it can be a product that you sell. And it's a very easy product to set up, that you sell strategy, and you articulate what the value of that strategy is and what they get out of that. If you want to do a risk reversal situation, say if you're not happy with the strategy, we'll refund your money, right? Here's a couple of things. When you value your time and when you charge for your strategy, what you're essentially telling people is that you're valuing the intellectual property or the work that you deliver. And also, they're committed. If they put money down on your time, they are committed. They're going to show up. They're going to do everything that you ask them to do. They're going to deliver. They're going to walk you through what you're going to walk them through what needs to be done, and they're going to be complicit because they're part of that process. And because they make a capital investment, they're more likely to spend more money with you. Because once a person spends any money with you, any dollar value with you for anything, they immediately become a customer. They're no longer a prospect. They immediately become a customer, right? So those are the things that you want to take into consideration. If you're giving away free strategy sessions, start charging for them. Package it up, provide it as a service, let them know the benefit of doing that session, what the outcomes are, what they're going to pick up, what they're going to learn from that process. And you can start collecting it. We've got people that charge $15,000 for strategy sessions. We've got people that charge 12.5. 7, they're being paid for strategy, for thinking and talking and showing and sharing everything that they know to help that client. So one thing that you can do is have a product offer of a strategy session and get paid for it. Whether you put a couple of $100 on it, $500, $1,000, $5,000, whatever monetary figure you put on it, you can sell that as part of what you do. And one thing that strategy always leads to is more work. Right? It's more work. Now, project pricing. This is another thing you want to take into consideration. You want to have a fee for the service you provide, and you want to charge for the project. What most people do in our world is they go monthly recurring revenue. The dangers with it's attractive to go get paid monthly. It is very attractive because as you put more clients on board, you can create a compounding revenue growth rate in your business. So 1 month you might bring 2 clients on, they're paying you $2,000 a month, you're making $4,000 a month, right? The second month you bring another 2 clients, and now you're making $8,000 a month. The third month you bring another 2 clients on, and now you're making $16,000 a month. And before you know it, you've got 6 clients, you're making $16,000 a month. Now, as long as you keep those clients, you're going to continue to earn that $16,000. When you lose the client, you're going to lose that revenue. It's going to drop back to the loss. You might lose 2 clients, and you go from $16,000 down to $12,000, right? So as you recurring revenue is very attractive. Charging people by the month is very attractive because it creates cash flow, right? It creates cash flow. The challenge with charging by the month is credit cards fail. Clients decide to stop paying. Clients don't pay, right? They don't pay you invoices on time, right? If you're invoicing your clients month to month, right? So these are some of the challenge. And what happens is you end up with a situation of receivables. So you can't actually forecast your income because the income is actually projected, it's not realized. So what I mean by that is you can only count the money you get paid. You can't count the money that you don't get paid. That's money that isn't in your bank account. What some people do is they make this mistake. They go, great, I got $100,000. I generate $100,000 this year, but that $100,000 is going to be drip fed to you over the course of a year. What if the client leaves? What if the client doesn't pay? That becomes a receivable or a deficit to your business. And so what happens is you run a risk. So one of the things that I recommend is that people charge upfront. You can charge the client for the entire amount all the way up front. So let's say, hey, 3 months down, like you're going to do a project for a client, package it up, right? 3 months worth of support, $9,000. Ad campaign or ad budget, $3,000 a month, $9,000, so $18,000 for 3 months as a campaign, right? Charge a setup fee, $4,000 or $5,000 or $3,000 for a setup fee, right? That adds more revenue, more income, and more pricing structure for your business. So you can ask for the money up front. A lot of people don't, but you should, because some people go, yeah, I'll take care of it up front. We get paid up front for clients 3 years in advance because we've set up a system to provide fixed pricing for the prospective customer, right? So understand that you have the opportunity, right, to generate a lot more revenue by looking at the way that you structure your pricing models and structure how you charge fees. So just to recap a couple of things here, charge an hourly rate, have an hourly rate available, one that people can buy from, book in a time with you, have a strategy set, get paid for it, sell it, package it up like a product and offer it to the marketplace, right? That's number two. Number three, instead of just asking for monthly recurrals, which sounds very attractive, but in a lot of ways, it can create lots of problems, ask for the money up front. Have a mix of recurring and a mix of getting paid in advance for your projects, right? So those are the three things or three options. The fourth thing I shared was have a service pack. Now, service pack is 5 hours or 10 hours, a service pack, so that people can use them to make adjustments, ask questions, get fixes, get support, and they pay for that in advance. And so every time, instead of selling out by the hour, you can sell by the 5 hour or by the 10 hours, right, as a service pack. So these are 4 different methodologies or models that you can use for pricing. One of the things that you want to take into consideration is that you want to make sure that you understand your physical costs. You also want to understand that you have other liabilities in your business and things like taxes. Depending on the state you're in or the country or the place you live in, you're going to pay taxes. If you're running a business and you're earning income, you will somewhere have to pay taxes, right? And so you need to keep that into consideration as part of your margins, because that comes out of what you get to keep, not out of your costs. It actually comes out of your gross profit, right? So you need to understand how much you're making per client, because this is going to also help you to understand how much you can invest to acquire a customer, right? And that's a whole other conversation and a whole other podcast that we're talking about, is how much money you're going to spend to buy a customer, right? So the other things to consider in pricing, I talked about the concept of value-based pricing. So if you really know what your client is going to generate as an outcome or a result from what you sell or deliver to the market, then you can actually create a pricing structure based on value, or you can also do profit share as well. You can come in and say, great, for our services or our consulting, it's $5,000 a month, right? And also we take 8% or 11% of every sale that you make as part of this deal. Now you need to think, when you're doing rev share, you need to be mindful of the margin. Understand that the client also has fixed costs and profit margins. And on average, their profit margins might be around the 30% mark. So if you're going to take 11% of the whole sale and they've got a 30% profit margin, you're actually taking 30% of the profit. That is huge, right? A client is not going to agree to that deal, right? A client's going to find it very difficult because they're giving most of their profit to you. and it makes no sense to hire you to just give away the money, right? So understand that you want to be making sure you understand your client's costs and your client's profit margins, and that way you can do a rev share opportunity and a cost for service or investment in your services as you scale and grow the business. So a couple of things. As a strategy or a pricing strategy, one thing that I recommend, especially with the people that I coach, I sat down with people and I said, look, when you go to pitch a price, when you go to write that price in a proposal or put that price on a pitch deck to demonstrate to the client, what you want to do is once you put it down, you delete the price and add 20% to the price. And that becomes the new price, right? So you physically actually type in the price that you're going to charge the client. And then when you see it, then you delete that price, you add 20% of that price, and now that becomes the new price. Most people undercharge. So when you do this strategy, right, put the price down and then add 20% immediately on whatever that price is, right? That way, you've just given yourself a 20% net increase in profit, right? You've added 20% net. There is no extra cost that you incur in any delivery for the extra 20% of money that you added to the actual pricing structure. So as a strategy, when you sit down with a client, and before you sit down with the client, you put your pricing structure in, and you've got a proposal, or you've got your deck, delete the price, add 20%. And then what you might want to try and do is you do this every single time you sit down with a client. So every time you go to present to a new client, you wipe the price out and add 20%. And so this way, slowly, you're going to incrementally increase the value. Now, the cool thing is that you might be able to increase the value 3 or 4 or 5 or 8 times, right? You might triple your prices and still get sales, right? But now your profit margins are going to be significant. And the thing is once you hit a ceiling, and you're going to know it when you hit a ceiling because you're going to get pushed back, then what you want to do then is not drop the price. What you want to do then is you have to add some value, and then you increase the price again, right? So you add some value and then you increase the price. And this is what you want to do to maximize your opportunity to increase your revenue. And it's one simple tactic that you can do right now very easily and very quickly where you can actually generate more profit, right? Now, I've got a few people here that have asked a few questions. Is there a certain multiple we need to charge based on our expenses to deliver that service, like fulfillment and other stuff? Well, yes, you need to take consideration. Think about it. Take consideration all the costs. Take consideration software costs. Take consideration your time costs. Take consideration any time costs of anybody that you hire. Take consideration any fixed costs for service delivery. All of those things, you want to write down all the costs that are associated with the service or the product that you sell, right? You want to write it all down, and you want to work that out. And that's going to give you a much bigger understanding of what the fixed costs are, including your time for a particular project. Then what you want to do is you want to 3x the price. If you're just doing a standard 100% on cost, then you want to 3 times whatever the all-inclusive cost is, right? The question was usually the rate is higher in a 10-hour package. Yes, like 5-hour pack, $500. 10-hour pack, $1,000, right? Or you might provide incentives. So if you buy a 10-hour pack, you can buy it at $900. So thereby they're getting $90 an hour as opposed to $1,000 an hour, right? So these are some of the things to take into consideration when you're looking at pricing. Understand that the experience trumps everything, and the only way to get experience is to actually sell to clients and do the work for clients and learn as you go along the way. But you don't have to undercharge, and you don't have to outdo yourself. Know that there is a market. There are people out there that are charging a premium for what you do. There are people out there that are charging the middle ground for what you do, and there are people out there who are cheaper than you, right? There's always going to be somebody cheaper. Now, it's really interesting from a competitive advantage point of view. There's very few people at the top, but the people at the top tend to make the most money, right? A lot of those people make the most money because they're charging the most, especially if they scale it, right? The people in the middle are making money. They're making more money than the people at the bottom. The people at the bottom have to productize so well so that they protect their margins so that they don't undercharge, right? They don't undercharge, they don't lose profit in what they do, right? So you can use price as a competitive advantage as well. As a unique positioning. One of the things that we used to do with a particular agency that I ran was we used to say to people, we're going to be the most expensive provider in this market. We're not the cheapest. We're the most expensive. You're hiring the most expensive because we hire the best people on this project, right? The investment we make in us is we have the best team, right? So we guarantee you that we will be the most expensive in the market, guaranteed, right? Well, that point of difference, we used to win lots of clients, and a lot of our clients understood they were paying a high investment in our services, right? So you're going to use price as a competitive advantage. The challenge with pricing too cheaply is just, it's a race to the bottom. You can't compare apples with apples. When people sit and say, well, I'm just going to go away and get another quote. Well, you know, depending on what the deliverability is, or what the strategy is, or what the outcomes are, that's going to vary depending on who they talk to. It's going to vary on the type of service you provide. So if you've enjoyed this, you can go to Consulting Unleashed, the Facebook group, go to our YouTube channel for Consulting Unleashed, go to join us on in that Facebook group, the Consulting Unleashed Facebook group, if you haven't done already, because we will be uploading these episodes there. In fact, we're having some tech issues, but we're going to fix those tech issues in the coming days. So with that, I want to thank you for hanging with me. Unless you've got another question that you'd like to ask about pricing, I hope this has been useful. If you've got questions, jump into the Facebook group, ask me questions, and then I'll answer the questions here on the podcast. Otherwise, I'm going to see you same time, same channel tomorrow. Tomorrow, we'll talk about a few other tactical strategies when it comes to the types of products and services you can sell in your agency. So appreciate you hopping on. Look forward to seeing you in the future Business Unleashed Live podcast. Take care, everybody.